We've certainly got some news for you today. The Westpac Melbourne Institute Index of Consumer Sentiment fell 5.6% in May. That brings it down to 90.8, which is the level that we last saw during COVID in August 2020. The fall was also the largest we've seen, apart from those collapses that we saw during the COVID period, since 2015 and 2014. The 2014 fall, of course, was associated with that horror budget that we all recall very, very clearly. Components of the index were also quite weak. There was an 11.2% fall in how people see their finances over the next 12 months. And of course, the reason for the fall was the huge lift in inflation that was recorded on the 27th of April to 5%. We hadn't seen inflation of 5% since 2008. And of course, the decision by the Reserve Bank to raise rates for the first time since 2010. The news on the housing market, of course, was most interesting. The fall in is now a good time to buy a dwelling was only 1.5%, but that is now 41% below its peak in November 2020. But of course, of most interest was the fall in the outlook for house prices. That index has been consistently strong. If you're above 100, it means the majority believe house prices are going to rise. The index fell by 9.2% to 121 in the May survey. It's still above 100, so we still have a majority expecting price rises. The numbers in Sydney and Melbourne are much lower than that national average of 121. And I expect over the course of the next few months, we're going to see even bigger falls in that index. The Reserve Bank meets on the 7th of June. I expect that they'll raise rates by 40 basis points, although analysts think 25 basis points. Our view is that now is the time to get ahead of the curve in terms of moving quickly to take account of the fact that these inflation pressures are very strong, and strong action needs to be implemented now to contain those pressures and contain expectations about how long those pressures will last for.